All right, so we have had a very interesting week in the charts. I'm going to go over my thought process on current price action with you guys, and we're going to basically kind of review what we talked about in the live stream and put it into a more condensed form and just kind of talk about what we have going on here. So first of all, I want to start with the CME chart, which I think is very interesting here. We have this bullish cipher harmonic that has played out almost exactly to a T, right? The one-to-one extension for this harmonic to come to a close fell on last week. I had said that I was willing to push it out to this week, being that it's over a 2-year long harmonic. I think being off about 1 week is no big deal, right? You can give it a little bit of a leeway. And there was also another reason why I wanted it to fall on this week, which we'll talk about in just a little bit here. So with the CME chart, our Elliott wave reverse impulse worked out great. 1, 2, 3, 4, 5 took out the low. We can also see here that the CME does not show the 17.5k wick. That was because the low was put in over a weekend. So to have the CME drop down to about 17.7, 17.8, I think is very significant to at least show, to some degree that price area was touched, and to have that represented on the CME chart, I think is very significant. So Elliott wave, check. Bullish cipher harmonic, check. And we also do have bullish divergence on the weekly chart. We can see that we took out the previous low, and it was done so on a divergence and momentum, right? So when you sort of put all of these things together here, it really does add up for a bullish setup. So now with that said, we do not have a lot of these same things being shown on the perpetuals chart, which we'll go over to now. So again, we were looking at, our 1, 2, 3, 4, 5. There is a scenario where the wave 5 does not take out the wave 3. And I think it's possible that we are seeing that scenario here. Okay, so it's not something that happens very often, but it does happen with Elliott wave, and I do think that it is something that we're seeing here right now, at least given all of my other analysis. Okay, so we'll review what we have. We have our potential Adam and Eve bottoming pattern, very significant. Okay, we have our local falling wedge, which we are still inside of to some degree. So I would really love to see either today or early next week to see some strength to break out of this. I think that would be a really good signal from the bulls that we really are looking for some degree of continuation to the upside. This local, we had a leading diagonal impulse wave 1, 2, 3, 4, 5. We did take out the low. I know it's not significant, but we did swing failure this low. It was taken out. And we did have some, a really nice bounce on significantly high volume. You can see that 4-hour volume here was higher than even the low that we put in over here. So that it really is a significant sign that we did that, right? So although you can see here the difference between the CME chart and the perpetuals chart, right? We did not take out our low like we did in CME. Okay, but in some ways that could be bullish in and of itself, being that we came back with hot data on the CPI and the PPI, and even given that bad news and having like a peak of bad news that's going on, the bears were still unable to take out the low. So everything sort of really fell into place the way that I wanted to see it. So even though we didn't get the low that I wanted to, I saw us get this drop down, and I thought to myself, the bears aren't going to be able to push us any lower. That this was it. I liked the reaction that we saw here on the swing failure. Okay. One other thing I said I was going to take a look at is why I liked this week to put in some degree of a bottom. If we do a 1-to-1 extension for this move up to down, we can see that price does like to move harmoniously. So the move from the bottom to the top, from the top to then the bottom of this move, it's the 1-to-1 extension. It's in great harmony here, right? So now we would expect some degree of a move up for a length of time, possibly extending out to end of year, right? We would expect some degree of maybe a continuation upwards, maybe looking towards this high once again. So more immediate, like I said, we really are battling to break out of this falling wedge, and until that happens, it is possible that we, although I do like this setup, to me this is a really, really nice opportunity here for the bulls to get a move up if they follow through. It is possible that we do have some degree of a rejection here, and we could come down and actually hit that target that we wanted to. Now, the timing and just everything else with all of my analysis does not suggest that this is going to happen. So for me personally, I'm not going to be trading based on that fact. I'm going to be trading based on this was the wave 5 here. The bulls made its attempt. We are going to, only get a move up from here. I don't think that this low will get taken out. Okay. Now that can change, and we're going to have to take it day by day. So here's another thing I do want to look at as well. I want to look at our macro falling wedge. So we have our, I'll try to clean this up a little bit for you guys. So we do have, this macro channel here, right? The range value area high falls in at that 21.8K area, which to me is the next major resistance. However, one thing that I think would be a really key sign for the bulls, something I would love to see them do, is to take out these highs here. So we can see here we've had these highs put in, and this area has been a really contested area between the bulls and the bears. I would really love to see price break up above, first of all, the point of control, and then to get a move above here to signal a degree of strength, right? If we were to get some degree of a more significant pullback, let's say, I would really, I think it's important that the bulls do hold this area here, which is the bottom of the range, our weekly and the range value area low. Okay, so we can see this is the daily time frame. We wicked down, we took out all of these lows here, right? Bounced off the low time frame value area low, and managed to close the daily candle back within the range, and then have some degree of continuation today. Okay, so for me, I guess my next areas of interest, I would really love to see this area hold if we were to get some degree of a pullback down to that zone. If this area was lost and we started to really get back down here again, we may be looking at a different kind of scenario. On the other hand, looking at, like, again, so this is our macro falling wedge. Let's just go ahead and hide this fixed range pull here. Let's hide this weekly here, kind of clean up the chart just a little bit so we can get an idea of where we're at. We have this macro falling wedge here, right? We held it as support, broke into it, had a deviation here, okay, and then closed back within the channel. To me, this is a very significant sign of strength on the bulls end here. Why is that? We broke down, back tested the macro falling wedge. We took out all of these lows here that had been put in for quite some time, and we managed to gain acceptance back into the channel. All right, so for me, now it ultimately comes down to market structure change. We took out these lows. We're having some strength for a move upwards. I would really like to take out these highs and see basically bullish market structure change and continuation. Okay. As I said, that 21.8K area is a huge area for me for resistance, and I would look to short that zone. But in the meantime, I would really love to see BTC take out these highs here, hold price within inside the range in the event that we do have some degree of a pullback. To me, these would be all really, really, really good signs.